Well, the first piece of advice is we're not like, this is just opinion. Like there's probably some legal disclaimer, but the second piece of advice is this.
that shows how good we are with the legal, that Frank's disclosure is there's probably some legal disclosure you should look up somewhere if you're listening to
Right. We should put that in here. Thankfully, nobody's listening, so we're probably not going to get in trouble.
This episode is all about inflation. Frank and I talk about the things we are buying, the things we are selling, our mindset and attitude in an economy like this. And as Frank alluded to so eloquently in that cold open, these are just the opinions of two morons who have lucked into a few good things in their days. So they are our opinions, and you should do your own homework, your own research before you buy or sell anything ever. So even though no one's actually listening to this episode, if you are, make your own decisions.
You're listening to Let Me Speak to a Manager with Frank Cava and Ian Matthews.
What a crock of shit.
Yeah, that was hot mic, Sam.
You can't say God on the air.
Don't worry, nobody's listening anyway.
Do it live! I'll write it and we'll do it live!
Frankie.
Ian, you son of a bitch.
Frank, man. So I Super Bowl had a little party with just my kids and Jenny. We had a little party. Did you guys do a big party?
Oh, we were all the shits. We were getting over a stomach flu. We did nothing. So I'll tell you a fun story about what we did.
Whole family had the shits. Not a great Super Bowl.
True story. The only thing, like, we're all like, we want to eat something, right? I think this is a perfect way to start this episode because we're going to talk about inflation, like where we are in the world. So it was like 2:00, and I'm like, I want to eat something that feels like the Super Bowl. Can we like make nachos? So as a family, we decided to go to Whole Foods. We go to Whole Foods, we shop for our stuff. We pull up to the register, and I have a 3-year-old, as most of you know. And I see a person at the register, and I turn my head. I think it's a woman. In any other year but 2022, you say she, but I look and I'm like, I'm completely confused. This person has green hair, and I don't know. So I'm like, Max, say hi to they. So I'm trying to make conversation. I'm trying not to make this awkward. I don't know how to act. The person there was friendly, very nice to Max. I'm like, the Super Bowl's today. What do you think? And they're like, honestly, I don't have an opinion. I don't really pay attention to it. I'm like, perfect. And then they're like, that'll be $100. I'm like, I was in fact at Whole Foods. This is a perfect example.
I don't know if it's just Whole Foods or if it's others, but so same thing. Super Bowl, I took IJ to Fresh Market, which is not as expensive at Whole Foods normally.
That's gross.
And we were just there to make like buffalo chicken dip and, get some nachos, maybe some root beers. I like it was 2 bags. I had 2 bags. Same. It was $100. Like, and buffalo chicken dip doesn't have a lot of premier ingredients in it. It did have some chicken in it. But same thing where I just I carried out 2 bags for $100. I feel like I can't go to a grocery store no matter what for less than $100. I feel like it's to that.
When you go to so I have a cook. She comes to the house. She used to come to the house before COVID. Now she cooks offsite. She brings us prepared meals. We get to pick what it is. And I used to think it was an incredible expense and an incredible luxury, but it isn't. If you order something just for yourself from DoorDash, what does it cost? Like, what's the net cost with fees, tip?
It's obnoxious. So if I'm just ordering Chipotle for like 3 of us, me and the kids, it's like $50, $55.
So
15,
I have a hard
15 of it is fees, and they guilt you into giving a tip. And
right.
It's to the point where I'm not using DoorDash nearly as much now, just out of principle. I'm like, we're getting in the car. Like, it's 2 miles away. We're going to Chipotle.
So one of 2 things, right? It's either you're paying for the convenience, or I think Whole Foods, if you go into Whole Foods, you're going to Fresh Market, you go into one of those locally owned grocery stores, neither of those is a discount place. You don't go there for discount. You go there because it's convenient. You're paying for convenience. But also at the back end of all this is inflation. Like inflation is a massive, massive part of what's happening in the world.
Yeah.
Like if you're listening to us and you don't understand what inflation is, well, guess what? Neither does anybody else. But let me show you in its cleanest and easiest form what inflation is. When I was living in Charlottesville, there was this pizza place. I loved it. Took Ian there before. It's called Christian Brothers. It's incredible. Great pizza. So inflation is this. You walk in and Christian Brothers slice was $3. They had hockey tape. That stuff that you'd use to either put on a hockey stick or you wrap like a swollen finger, and they put over the $3. It said 3, and then the hockey tape 50. That's inflation. They haven't even had time to order a new board, but the pricing of things had gone up to a point where it no longer was feasible.
They couldn't make money. They couldn't make money on a $3 piece of pizza.
So they had to raise it. So like right now, people are freaking out around the world with inflation, but it's real.
You know, try to go buy a new car right now. Try to go buy a used car. So used cars right now, they're up 40 to 60% just over the last 2 years to buy a used car. Like it's a great time to sell a used car, but no one's selling it because you can't go get a new car. So
Right.
so you're trading one asset for another expensive asset that you're getting to that situation. I think where most people feel inflation, where most Americans get upset about inflation is at the grocery store, because they go in there and they're like, $7 for a gallon of milk. What the? My old man I've talked about before, he knows the price of gas at all 11 gas stations within 5 miles of his house. And he can tell you like, oh, the one in Toledo over there, you know, it's 11 cents cheaper. I don't really pay attention a lot to the price of gas, and mainly because I don't drive a lot. I'm kind of stuck in my little town most of the time. I come to an office here. I don't travel for work. I don't really commute. So I fill up my truck like once every 2 weeks. So it's not a consequential, but like if you have a long commute and you're filling up your tank twice a week, a truck, it's another $50 a week. And that's a hell of a lot of money. So I think most people are feeling the crunch. And the reason in my opinion, why we're going to get into what inflation matters, but I think a reason why inflation is such a hot potato is people vote on the economy. They vote for president, they vote for local government, they vote for the Senate, for the House. They vote on how they're feeling in their pocketbook. And whether the stock market's going up or the job market's hot, that stuff doesn't matter if people don't have disposable income left after the check. And if your expenses are higher than what your income is growing, and that's what's happening right now, is expenses are growing higher than incomes, people feel relatively less off than they did before the last election. And that panics politicians. So you hear the president, you hear elected officials talking about fighting inflation and here's what we're going to do. And I think a lot of it is trying to create a perception that governments can do something about inflation. I think they're pretty limited. And I think by the time they start doing things, it's normally too late and it's kind of fixing itself anyway.
Way too late. Right.
You know, with my favorite quote on inflation is the best way to fix high prices is high prices. And the meaning of that is just, if your price goes up high enough, you kill demand of anything, of just about anything, right? Like you need milk, you need other things, but for the most part, if a price of a car goes up 60%, you just keep driving the older car. So you quit. Demand comes down because prices went so high. Supply and demand at some point will meet. And if prices get high enough, people just quit buying certain things. That demand cools and people have to drop their prices that are in business.
Correct. And so when I got into this business in 2009, one of the things I was really kind of just, I didn't want to go broke. And my understanding of economics, I was 32 in 2009. So I was younger.
Warren Buffett's first rule of business, by the way.
Don't lose money.
Business, don't lose money.
Right.
Don't go broke.
Right. So that was what I was worried about. But when I got a little bit older and I started thinking about things, I'm like, well, I also want to make sure that I have a hedge against inflation. And like, how do I do that? Right. If you ever sit down with Ian and me Ian is better at the stock market than me. He spends time on it. He understands it. He understands the charts and the graphs. He understands it in an incredibly deep way, better than me. He understands collision centers better than me. But I have an unfair advantage against almost anybody when it comes to single family real estate in Central Virginia. I know it incredibly well.
Yep.
So what I did is I said, I'm going to use the thing I understand very well, and I'm going to bet on myself. And I'm going to bet on, even at these moments when prices are down, that they're going to fix themselves. I was at a banker event last night, and one of the things that came up was this guy. He's kind of a curmudgeon. He's a nice guy, but he's a contrarian. He called me.
By the way, the older I get, the more I like curmudgeons.
Yeah,
I think it's because I'm becoming a curmudgeon.
We're on a fast track, my friend. But this curmudgeon called me up in 2011, 2012, somewhere in there. And he goes, "What the hell are you thinking?" He goes, "Why are you buying this?" And I go, "What are you talking about?" He goes, this. I was like, "Okay, give me an idea of what you mean." He goes, "All right, here's 5 houses you just bought. You bought this one for 18, 22, 26, 27. Like the numbers, these are thousands of dollars for houses." I'm like, I won't say his name. I said, "Well, of course I'm buying them. They're 1/4 the cost of replacement value. Like, I'm buying them." He goes, "These things are never going up." And I was like, "Oh, okay." Like, and he scared me. I'm like, maybe I am making a mistake. But what happened was there was a disparity in the market, and those things went up, and those things are worth 150 to 300,000 today. Now, some of them had some work in there, but what it was is the market was down and we bought them. But what's happening right now is this. So this is an interesting thing that's happened, Ian, and we buy a bunch of stuff between Halloween and New Year's. And the reason we buy it is most people get distracted by the holidays. They're not really paying attention to the MLS, and even in a reduced market, it's not the time that people buy. People are doing things with their family. So professionals like us, this is when we buy. So we bought 11 houses. These are $500 to $1 million houses on the back end between that time frame. 3 of them I've done nothing but wait for the city of Richmond to give me a permit, and they haven't gotten the permit done. So a week ago, I went back through all of our inventory, and I was like, okay, there was 7% inflation in December. There's 7% inflation in January. I'm going to go back and look at these assets and see what they're worth. I bought one for $355. It's worth $450, putting it on the market. I bought another one at $325. It's probably worth $435 to $450. I'm putting it on the market. And I got another one that we bought at $309, and I'm putting it on the market. And the reason is because the market has changed, because the cost of things has gone up.
So I guess my question to you is, that's great. The prices have gone up. But a lot of your business relies on buying something and estimating your cost to fix it up to get a certain price.
Yep.
So even though your prices go up, so when you pro forma it, you're getting a better price than you probably estimated. But if you're being candid of the whole deal, you're probably spending more on your subs. You're probably got delays on stuff because you can't get appliances, you can't get basic things you can't get right now. You can't get cabinets, you can't get, I'm at least hearing this from most builders is our pricing's going up, but our margins aren't really getting much better because all of our expenses are pretty brutal, and we're pissing a lot of customers off too, because you don't have to worry about that so much because you don't have a buyer in mind. You just put on the market when you're ready. For people that are building, that are taking a lot and building something, they've got a lot of pissed off customers because no one's delivering.
So instead of answering your question directly, what I'm going to answer your question of is this. So I'm part of a mastermind group, and one of the questions is, should we do a panel on inflation? Like, what the hell are you going to talk about? Like, all you can do now is react. It's kind of like if Ian called me up and said, "Frankie, I got a hot stock tip for you. I think in 2022, you should buy Bitcoin." Like, the time to buy Bitcoin was 7-8 years ago before it went exponential. Like, now it's like, it's just another commodity. You got to deal with it. And it's what you got to deal with cabinets. Like, the thing is, though, there's still inefficiencies in the market. Like, my electrician raised his price but he hasn't raised his price enough where it's costing me margin because the market is reacting in accordance with it. So these things are all kind of happening. Now, there will be a point, it's going to come, where it's the opposite, where the market starts to drop. And people like my electrician aren't going to reduce their price immediately. They're going to be very slow to reduce. So there's this always this uncomfortable period in between. So the reason we're talking about this is for this exact reason. From 2012 to about 2016, I used to always talk about, I want to have a hedge against inflation. And that was buying real estate. And whenever I said it, people's eyes glazed over. They were like, who wants to talk about inflation? It's never going to happen. Well, it is. It's here. And from 2011 through 2021, that was the time to hedge it. It's too late now. So you got to just deal with it. So if you didn't sell your whole portfolio, or if you never bought, you're dealing with it a lot more than with people who aren't. So I think that's a really relevant thing to talk about.
I think, and I don't know that you did this just because of inflation, but I think something smart you did recently is you went and refinanced like $10 million of debt into longer term debt at
30
a
million.
lower rate, $30 million. So you refinanced. You don't know that rates are going to go up or down. The Fed's babbling on, and who knows. But I think it's prudent. I think what you do know is I can get debt at the lowest I've been able to get in the 12 years I've been in business. So pigs get fat, hogs get slaughtered. I'm taking this deal. And so I think that's smart, because if rates just go rocketing and you've got short-term debt and you have to go refinance, that could be a surprise to the upside. It's better to protect your ass on it. First, don't lose money. I'm going to lock in as much debt as I can, so I'm at least confident of that cost, because that I can fix. I can't fix the cost of appliances. I can't fix the cost of paint, the cost of lumber, but you can fix your cost of debt. So that's something you can do, that if inflation does rage for years, like I don't think that's going to happen, but some people are predicting that. Your debt's at least fixed.
That's it. So the woke movement is something that has, many detractors. And one of the things that you hear about the woke movement is the wokesters can't see past the end of their own nose. Well, no, neither can anybody else. Like every human being is selfish, and every human being has a perspective of one. As worldly as you try and be, you can't be. Like we all have to kind of take care of ourselves. It's the reason when the mask drops on the airplane, they tell you to put it on your face first, because you can't help somebody else if you're dead. Like self-preservation is real. But the point I'm driving out with that is this. If in my life, what I use is my experience, I bought my first house. I built it, but I was 23, 24 years old. And the debt, I think I was actually 25, but the debt at the time was 8.5 on a first mortgage. And my second trust was like 10.5 or 12.5. It was something ridiculous. And 8.5. Now, I lived in the 70s, but I wasn't buying houses yet in the 70s, late 70s, early 80s, when debt was 17, 18%, really high numbers. But right now, I looked at this and I said, the market is giving me interest rates at under 4% on investment grade houses, which is basically, it's almost a third, the real numbers, from what I saw 20 years ago. Will it get better? Maybe. Will it get worse? I don't know. But the point is, it's 1/3 as expensive as it was to have a primary house. And this is not a primary house. So this is a good time on the macro to make a move. And I explain it that crudely for this reason. If you don't understand real estate, what do you understand, and where can you look at things and say, this just makes sense to do it?
For a group of real estate people to be sitting around worrying about inflation, to me is absurd. There are lots of things to worry about. I would worry about a recession. I would worry about people not finding jobs. I would worry about incomes dropping. I would worry about a financial crisis where no one's lending for irrational reasons. Worrying about inflation when you're an owner of assets, to me, is just ignorant. Like, what do you mean? What are we doing about inflation? We should be buying more real estate. That's what we should be doing, and doing it as soon as humanly possible while the interest rates are still ridiculously low. I don't understand that concept of why you would have that many people worried about it.
If you made me force rank things I'm worried about, I'm more worried about Ukraine getting invaded by Russia than I am inflation, because that could denigrate into war, and that can turn into something that can really fuck with not only the people who are involved.
Global markets, jobs, the economy, everything.
Right. It has ripples because of the psychological impact for those of us not physically being attacked with tanks. So to that end, like, I'm worried about that more because I've hedged already here. And I know, like, this is a joke for Ian and me, but it's something that we say all the time. Like, two pieces of advice I give interns are: don't get fat because it's hard to get unfat, and buy hard assets. And interns are usually 20, 21 years old, and buying hard assets allows you to have security into the future. Like right now, gold has gone through the roof. So too has real estate, like hard assets, things you can physically own.
All I've learned in 20 years of working and investing is when it gets to the front page, you should do the opposite. I've learned that over and over, the hard lessons. I've chased fads. When you start hearing anyone telling you you should do something that is not an expert, that is not a deep domain expert, like I would consider you a deep domain expert when it comes to residential real estate. I think I'm qualified to talk about industrial real estate because I get calls from realtors on a daily basis offering me drooling offers on my deals right now because people want the kind of product that I own. So I think I'm well equipped to tell you my opinion of how industrial is doing right now. But when you start getting to, you use Bitcoin as an example. That's a good example. When you get random people that don't have any money telling you should buy a certain coin or a certain crypto, it's probably in trouble. When you get to the meme stocks, all of that stuff, I think, right now it's already passed, but like take the stock market, if you turn on CNBC today, you'll get pundits coming on left and right saying, we're buying energy. And it's like, all right, that just ran 50, 60%. And now that's the advice you're giving. And we're looking to get out of the big techs. And it's like, okay, well, that move has already happened. So to me, when I start seeing a bunch of common advice like that, and I see a company like Google that generates billions of dollars of free cash flow every quarter and is still growing 30, 35% a year. Google is. This is 20 years after it was founded, and it's down 15, 20%. And everyone's not liking Google all of a sudden, where if you project their cash in the next 5 years, they're going to have more money than the top 20 non-FANG companies. Like, I look at that, I go buy brands when they go on sale. So Amazon is way off its peak. My buddy, this is funny, Airbnb. I love that brand. I love that company. It's growing like crazy. Actually, Frank was on this brand way before I was. You were an early adopter with Airbnb, but strongest brand in the world. It's a reopening play over the next 10 years. Just went public a couple of years ago. My buddy works at UBS and he sends me a report because he knows I own a ton of Airbnb. And this is after Airbnb went from $210 to like $140. So it dropped 50% in value. That is when this analyst came out and said, we're changing from bullish to neutral and we have a sell. Now you put a sell out when it's down 50, like it dropped 50%. Now you put that out to cover your ass. And he sent it to me and he said, I know what you're going to say. And I wrote, let's buy. And I started buying because I'm like, whatever assholes do that. So now listen, Frankie. So it goes from 140. It just released results. It's probably like 187. Watch. By the time we put this episode out, I will be able to share with you, Danny sending me a release saying that they've upgraded the stock. Now that it ran 30% again, that's just whenever anything is popular sentiment, you should just do the opposite. So, for me, I'm watching you still gobbling up real estate. You're doing a great job. That's what you keep doing what you're doing because people are worried in real estate. It's a good time for you.
So I'm going to tell you a funny story, and this will be my close. Super Bowl was on Sunday. This will be slightly dated when this thing airs, but the point is the Super Bowl is on Sunday. And I think we're at a few peaks. I think we're at peak crypto. they had several ads. I did a whole thing with my team.
Several. It was like a dozen crypto
yeah.
ads.
I did a whole thing with my team on Monday after the Super Bowl, and we talked about it. I think the Super Bowl is a reflection of two things: society and the economy. And companies, American companies, are very smart, so they go after the things that make a lot of sense. And what does society want to see, hear, and feel? So to me, it was peak crypto. I thought it was peak electric. Like, I think electric vehicles are coming. And I think like the Super Bowl told you that. But I don't really care about either of those on the macro because that's not my world. But I do think it's also peak housing. And the reason I think it's peak housing, there was a commercial where Barbie was making fun of how hard it is to buy a house. I don't know if you saw that commercial. I played that twice on Monday for my company. And I said, these are the go-go days of real estate. If Barbie is on a television ad that in 30 seconds costs $7 million talking about how hard it is to buy real estate, well, guess what? It's not going to be that hard much longer because we're at the peak. And what we need to do is capitalize now because of these things, and we have the wind at our back, and it won't be like this forever. And peaks don't immediately become troughs, but what you notice with peaks is usually there's a handful of peaks, and then there's an event that causes it to come down. And if you look at a long-term chart, you're like, oh yeah, that certainly was a peak. But that's, to me, you have to pay attention to.
And it's we quote Warren Buffett a lot in here. There's a reason, because he's just done it for so long. But I'm in his camp of, it's never been a bad time to invest in America if you're a long time holder. And so all these things really come down to, are you looking to get rich in a year? Are you looking to make money in 6 months, in 2 years? Or do you buy things with the intent to hold for 7 to 10 years? And if you're buying for 7 to 10 years, you just want to buy assets that are going to produce unbelievable cash flow over that time in desirable neighborhoods, in desirable markets. That's why I bring up companies like Amazon, Google, Microsoft. To me, if I'm going to hold those kind of companies 7 to 10 years, they're going to do great. If I'm going to buy, I want to buy in areas of Richmond where all the nice restaurants are popping up, where everything's coming, and I'll leave you one last example on inflation. One of my properties in Savannah, the lease it's a 15-year lease, and the lease, my tenant is H&E Rentals. They're a publicly traded company, really good financials, great company. So the only thing that could happen to me in that is they go bankrupt. That's the only way my lease falls apart. But the lease is structured so every year, my increase in rent is tied to CPI. And so CPI is hitting about 7.5% right now. So I get an annual rent out of that building for $143,000. It's going to go up to $153,000 this year. So from an inflation perspective, that asset is growing along with other prices that are going. So my income goes up. And that's an example of a good cash flowing business. It's a piece of real estate, but I have an LLC around it. So to me, right, Frankie, that's probably its own business, and I can expense things towards it. But it's the same with your residential real estate, same with stocks. What can cash flow, period, right? That is not dead up to the eyeballs, that, if as long as it cash flows in any market, you're going to make money.
So if you're listening to this and you're not invested, what's the advice? Well, the first piece of advice is, we're not, like, this is just opinion. Like, there's probably some legal disclaimer, but the second piece of advice is this.
that shows how good we are with the legal, that Frank's disclosure is there's probably some legal disclosure you should look up somewhere if you're listening to
right. We should put that in here. Thankfully, nobody's listening, so we're probably not going to get in trouble. But the point of it is this: if you're not participating, participate. And I relate it to this all the time to people. If you don't own a home, I'm not telling you it's the perfect time to go buy something, so go do it. But what I'm saying is, if you do, in fact, I believe life is a carousel. And if your financial life is a carousel, especially around real estate, you're watching the carousel if you rent, and you're on the carousel if you own. And that's the easiest place to start, because everybody needs shelter and a place to go. So that's kind of the change. Like, people, most of what we do is positively received, but not all of it. Someone was like, I can't believe you're gentrifying these neighborhoods, making things unaffordable. I'm like, it's affordable for people who buy. It's just not affordable for people who rent.
Well,
And if you're,
you don't make the market, you serve it. The
that's
market
it.
wants something and you serve it. That's
But at its simplest form, if you're paying $1,400 a month in rent, you can probably buy a house in that neighborhood and own it, and you can trade up. And
without much of a down payment, with low interest rates you've never seen. It's just go out and talk to someone. Go talk to a lender.
And other things, being proactive and getting involved is your hedge against inflation. My first bonus check, I bought NVR stock with it. I spent $150 that I blew on something, and I put the other $1,500 in the stock market. It turned into something. I used to work at the Outback Steakhouse. I bought stock with it, like not with a lot of money, but it turned into a couple of $1,000s. Like, just be active, get involved. You're not always going to be right. You're not always going to time the market. But if you buy good things, what happens is while you're asleep, the market will go up in a lot of instances. Sometimes it comes down, but a lot of instances it goes up, and you look up and you're like, oh, that thing I get in the mail from the statement, or that thing that gets emailed me, that statement, shit, it's worth more because I was smart to pick something good and strong that aged well over time. So Ian, I think you can bring it home.
Why don't you just be honest with our listeners and admit that you spent $150 on Ben and Jerry quarts of ice cream that you filled your freezer with? Why don't you just bring that home? Bring that home.
I was 23. There was probably an ice cream purchase in there, but mostly I blew it at bars and beasts.
Probably beers.
It was
hey, great conversation on inflation, on a topic that you and I are not.
It was mostly on beers, Ian, and girls that didn't want to talk to me, which I should have invested the extra 150. Would have gone a lot further.
Yes. I'm very excited about another episode that we made that we are not qualified to talk about. So
correct.
There's probably a legal disclaimer somewhere in here, Frank. I'm going to say that one more time for our listeners.
I think that should be.
When we get to like episode 1500, like Joe Rogan, this is probably one of the ones we're going to have to go back and delete. Like he had to like take 70 episodes out and delete them. This might be one that someone calls us on when we're worth 100 million in our podcast.
All right, Ian.
See you, dude.
See you, buddy.